Hello here everyone, Chris Capri here, founder of the Second Skies. Today we're going to be talking about our first in a series of also pivot point classes. This one's our basic introduction to using pivot points for trading, particularly in the FX market. This is a very popular subject. Pivot points are very popular across all markets. They're highly used by traders across the board, and we're going to talk about how you can use this to trade the currency markets. Now the first question you may be asking is, what are pivot points? So pivot points are a technical indicator. There's a 5 and a 7-point system, but what the basics of what pivot points are is a method to calculating support and resistance levels for a particular pair on that particular time frame. Now it's done on a daily, weekly, or monthly basis, and so therefore if it's done on a daily basis, at the end of each day or the end of the New York session, when that closes, the pivot points change for that day and switch to the next day. But basically we can take a look at the calculations and show you what they are. But essentially, pivot points are key support and resistance levels. Most importantly, pivot points are highly used by institutional and bank traders, and these are the large players who control the markets. And so because they're so commonly used by the heavy players out there, this is a technique that we're going to want to use in our trading. Now the basic method for calculating pivot points, we're using a 7-point system here. So what it does is it takes the previous day's high, low, and close along with 3 support and 3 resistance levels to calculate the various pivot points. Now there's the high, low, and close divided by 3, and that's the basic pivot point there, or the daily pivot. And then you have a resistance 1, resistance 2, resistance 3, which has all their calculations. Support 1, 2, and 3. You don't necessarily know how everything is calculated, just know that it's great for calculating and giving you major support and resistance levels for that pair for that day. Now let's take a look at an example of how pivot points, how accurate they are and how they work. First of all, taking a look at the Euro-US dollar. So we have this sell-off here that kind of had a little bit of a resistance here. It busted through a major level here, touched down twice. These are hourly candles. Broke through and retested it, so a nice little breakout retest at 54.60. Sold off, broke above it, sat above this major resistance level, which had 4 or 5 touchdowns here. Now you can also see that the same level that it hit, this kind of random price level out of all the price levels, instead of hitting 55.50, it went all the way up to 55.70. Now what is so important about 55.70 and 54.60, or why are these levels such good support and resistance levels? Well, the next chart will tell us here. These are the pivot points that you're seeing here. Now the S is the support levels. S1 is support 1, S2 support 2, S3 support 3. And same thing with R1, R2, and R3, which is up here. Those are the 3 different resistance levels. The M are the medium points, and they're very commonly used when calculating support and resistance levels. But you can see, look at how accurate these pivot point levels are at showing you random places, what appear to be random places or mysterious places on the chart as to where people buy and sell these pairs. This shows you again and again how accurate they are. Same thing here. This candle stopped right here, opened here, boom. Same thing here as well. You can see how accurate these levels are again and again. And today's most recent uptrend, which is about a 100 pip climb, just randomly stopped at some level in the sky. Nope, not random level. It was a pivot point level and started to reverse course a little bit. So you can see how powerful these are. Now, in terms of trading with them, one of my favorite methods is using pivot points, Fibonacci's, or in Fibonacci's together. So oftentimes when you have a nice little trending move, an impulsive move, you can always tell it's impulsive because the candles are not only consistent, but they're powerful, they're large. It's a very strong move. So if you look in about a day and a half, the euro dollar sold off from 58.50 to 54.50. It's a 400 pip move. Now in about 24 hours, less than 12 hours of this period here, the pair only climbed about 100 pips, maybe 120 max. So in 24 hours you have this move here that climbs 120 pips, but yet in 36 hours you dive 400 pips. That tells me that this is impulsive and this is corrective. So I'm looking for this thing to possibly hit a pivot level, or I'm looking to get in, but in this case it comes right up to a pivot level and a fib level, the 38.2 here. When you see the pivots and the fibs line up like this, they often act as great support and resistance levels to enter a trade in the same direction, particularly when you have a nice trending move, a nice fade, which is corrective, clearly corrective in nature, and then looks to be a great place to sell off. The third thing I use to qualify this trade is I use a MACD oscillator. So now during the selling off here, look how strong and deep the MACD got here, and a major dip here in the histogram here. But yet when the pair started to retrace a little bit, the histogram never even got quite as high there. In fact, it even started fading off significantly, showing some good divergence here as the price action was moving sideways. A great sign that this thing wasn't going to make it up past this fib level here, and a great place to go short. On top of it, you got the 55.50 level, so that is one of the mid-round numbers. There's a large amount of order flow that happens around round numbers, particularly the 50 level. So you have all the reasons to be going short here. Now, in terms of targets, where do I like for my targets? I usually go to the deepest support or resistance level that was touched, potentially even one past it. In this case, my target, if I was getting in here, my target would be the same place where the actual pair bounced, and also is this pivot level. So you got to move from 55.60 all the way down sub 55. It's a nice 60 pips in a handful of hours. Nice little trading day for yourself there. So the general fib retracement and pivot level target is the deepest support or resistance level that was hit previous to the actual fib retracement. Let's take a look at another example of this here. Okay, here we have the dollar Swiss, same on a 1 hourly chart. First of all, we have a nice pivot level right at a round number. This is absolutely fantastic here. The pair starts to go long, goes on a nice little climb for about 170 pips, brief wick above the M4, the pivot level here, but then it finds a resistance there and sells off right to the 50% fib, which also happens to be the daily pivot. This is the most important pivot that you could possibly have there. Usually a break above it is very bullish, and a big candle below it is usually a good sign of a bearish move to come. But the pair stops dead in its tracks right here. Also around a round number, also around the daily pivot. You have all the reasons to be going long, and we check in with our histogram here, and the same thing. Very strong histogram as we're selling off, or as we're buying up, and as we sell off, the histogram is very weak, showing that this is a relatively corrective move in nature. So our method would be to go long right at the pivot and fib level if we can, and target the highest pivot point reached from the previous move. Boom, again, a handful of hours, about 60, 70 some odd pips. Nice little trade for one session's worth of work. One last final example here of the pivot fib combo is on the dollar CAD. So now we're moving to a commodity based pair. We get right to the 101.52 level, which is a good round number and a pivot point level. The pair starts to trend very impulsively, clearly impulsively, and if you look, it goes from 101.52 all the way up to about 102.70, so 120 pips in about 24 hours. And after one big self candle, it just sits sideways right at a fib level and a pivot level, all matching up together there. So since it's going to the 50% fib, we expect a full retracement at least back to the strongest or the highest pivot level reached previous to this move, which would be the R3 level. So we get in right at the fib and pivot level, and we target the resistance level, and bam, same thing, handful of hours and we're there. So you can see how this tactic works again and again and again. Also looking at the difference in our MACD histogram. Boom, very strong histogram here, very weak histogram here, signaling that the move is unlikely to continue on past this little level here. To sum it all up, pivot points are incredibly popular in all markets. They're just very well known amongst all institutional and bank traders, whether it's equities, futures, or currencies. So because of their overall popularity and usage by the large players, it's very important to be understanding and using these levels. They're fantastic for fantastic for determining support and resistance levels. Random levels that seem like the pair stops when you pull up pivot points. They're great at showing you where and why these pairs often stop at these levels. The common method the method that I talked about in this one here is look for the pivot, fib, and round number combo. When you see a pivot, a fib, and a round number line up, if the pair has retraced to that nice fib level, look to go long or short at that level in the direction of the trend, targeting the highest pivot point reached from the previous move before the retracement there. Very common method to use, very powerful. You can have very tight stops in this, and it allows you to be generally consistently accurate and have very powerful moves. In terms of our services, we specialize in private education and mentoring. Every single month I take on a handful of traders and I pour a ton of energy into them, give them the same proprietary methods and systems that I trade with on a day-to-day basis. I usually take them on a 1-month basis, And usually inside 1 month, I'm able to take any trader and make them profitable inside of 1 month. Mostly because you're getting a ton of energy and information from me, but you're also getting the same systems that I use on a day-to-day basis. For those of you that are looking for a systematic way to trade, we have the Sniper system here. It's been incredibly powerful and accurate. I'm adding new systems to it all the time. I now have 2 pound yen systems, and the system itself has actually done more pips in the first half of the year than I did all of last year. So it's a very, very powerful system. It's a great way to no longer have to do research or analyzation or anything. All you have to do is just understand the signals. If you got a signal, you trade. If you don't, you walk away. Makes trading as simple as possible and reduces the emotional aspect out of it as well. And for those of you that are looking for live market webinars, analysis, and trade signals, I give those on a daily, weekly basis based on all my proprietary systems. So for those of you that are interested in any of these services, don't hesitate to email me info@2ndskies.com or visit our website www.2ndskies.com. Good hunting, everyone.